Okay, everybody. So, like I was saying, I'm going to go ahead and show you the VIX and how that overlays with the S&P 500. What I've been talking about the last couple of videos is how as soon as the volatility index started spiking up, it always produces a crash in the market. As you can see here, just overlaying it on top of each other, you can see how the moment that it started to spike up, everything started to tank. Usually what the VIX ends up indicating is a high VIX means low stock market, and a low VIX means a high stock market. So what you want to do is be careful with that, just because that's what major indicators we use to see if the stock market is going to crash or if it's going to continue running. Right now, we are getting a breakout of the VIX, and that is leading to the S&P 500 crash, as you can tell right here. Let me overlay it right there. You can see how we're not done yet, not even close. Right here on the daily, as far as the MACD, it does look like the VIX has another big breakout to go through, and that'll put a huge dent into the market. It'll make it crash. And another thing that we're starting to look at is the DXY is starting to break out. Let me go ahead and remove the SPY off of this so we can get a clear view. So if you can see here, we've actually landed at support. The DXY is starting to try and break out of 104.5, and it did come and touch 103 for support, but now it is starting to try and break out. If you can see here, this rolled over above, this crossed over, and right here, it's starting to try and cross over as well. So what we're most likely going to see is Bitcoin, risk assets, S&P 500, everything is going to start to fall. And what we want to do is we want to go ahead and try and catch the major swings if we can on here, because nothing ever really goes down straight. What happens in the markets is we end up getting bounces. I don't know if it's going to bounce like this right here once we break the support line and come back for a retest, or if it's going to touch the support line and come back for a retest. It's going to be one or the other. We want to make sure that we are able to stay vigilant, because that would be a great opportunity to make a quick trade. But more than likely, within the next couple of weeks, what we're going to see is another leg down, followed by a bounce, followed by a further crash. But I believe that's going to happen in less than a week, just because of how aggressively we are starting to come down based off of the VIX. What you also want to start looking at is oil. Oil looks like it's coming back to find support just where I drew the line here. It did not break any lower where I drew it. And more than likely, what we're going to start to see is if there are more production cuts from Russia's oil, it would put more stress on oil and energy markets. What we would see is it would start to spike up, like what we're seeing here on the MACD. Oil is actually crossed over into positive territory. And usually, what that means is it would follow with the next couple of weeks of aggressive moves up. Right here on the rate of change, you can tell how it's almost breaking out. If anything, it'll come back for a retest a little bit lower here, but it is indicating that it's about to break out aggressively. And everything is starting to correlate perfectly. We are starting to see, at least for myself, I am starting to see clear water here, how we are about to tank. Because look at this. If VIX goes up, market goes down. VIX goes down, market goes up. Energy goes up, market goes down. Energy is integrated into every aspect of our economy. So if oil goes up, everything having to do with transportation would skyrocket in price, just because energy would nearly double if it does go back up to 94, 95 area here. If we do get to reach the 94, 95 area before Christmas and then come spike down just to find support, more than likely what we would see is if there are production cuts by Russian oil, we would see more costs or higher costs in energy prices starting to skyrocket. That would more than likely end up having to happen in January once we do get to those areas for a retest. But we may end up seeing a 94 oil per barrel before Christmas, just because of how the moving average is starting to show, and as well as the MACD. The MACD looks like it wants to break out. It already crossed positive territory. And as far as the S&P 500, what you really want to be looking at is if it finds support right here around the 3,700 area. If it breaks through all the way down to the 3,600 area, be prepared for a bounce, just because nothing really ever goes down without bouncing. I've been in the market for long enough to know we will get a bounce at some point. But whether it's something like this or something like this, no one really knows. You just have to watch the indicators, especially the rate of change in MACD, because that'll establish either a lower low or some sort of support where you get to see a bounce like right here. This is what I drew out a couple days ago, and it's actually playing out beautifully, like perfectly to the line. So what we're going to see is more than likely something like this. We'll see a bounce, a retracement. However far low we go, I believe maybe Bitcoin might end up bouncing somewhere around 16.5K if it decides. So if we can find support there, that would be great. But it does look like we are getting a lower high here, and that's not necessarily good for a bounce on it. So just be very careful. But as far as the S&P 500, it more than likely will get a bounce around the 3,700 area, if not the 3,600 area, to come back against resistance. If not, try and hold support. But in the long run, it would break that support. I don't believe we are going to be able to stay above this. I do believe we are going to start to sell off aggressively, followed by a bounce. But where that happens, it'll either be here or here. I'll keep you guys updated with the video, but I just wanted to go ahead and share exactly my indicators here with the MACD, the moving average crosses, because it does look like they just crossed, which produced the sell-off, as well as the FOMC. Everything came in a little bit hot, and what we want to do is we want to stay vigilant, because you can lose a lot of money here real quick if you are not up to date with the type of charts, what's going on, especially with the VIX. The VIX looks like it's literally about to break out aggressively. You see, it came back to find support right here at that circle that I had just drawn. Let me go ahead and just zoom in on that. You see that circle that I drew where we would be finding support? Look how perfectly that played out. That was a few days ago too. So what we're going to see is another higher high here, and that would produce a huge sell-off in the S&P 500, as well as all risk assets across. But what I want to show is how this is perfectly tied to the S&P 500. I showed you that earlier. But if you have any questions, go ahead and leave a comment down in the video. I will start posting a lot sooner, just because we are starting to get aggressive moves, and I want you guys to stay up to date. But if you have any questions, go ahead and leave a comment below, subscribe, and good luck on your trades.